that shade of red. But what are some of the factors that we should be looking at? Let's welcome Vinay Rajani from HDFC Securities to join us today. Hi Vinay, thank you so much for joining us today. Very good afternoon. Well, firstly, let's talk about Nifty. It's down more than 200 points from the Nifty 50's record high that we saw earlier in the week. But it has been witnessing selling pressure since midday yesterday. But going forward, what are the kind of levels that we should watch out for? And the Bank Nifty as well doing pretty well in trade today. Bank updates have been decent so far, some outperformances as well. So what are the levels to track for both of these counters, both of these indexes?
Yeah, good afternoon. So yes, Nifty has been underperforming, and for last two trading sessions it has been falling. But if you were to look at the overall market, the Bank Nifty, as you said, has been doing well. And technically we are down but not out, because Nifty is still placed about 20, 50 and 100 days moving average. So in a way we can say that we are still into a positional uptrend. This is a running correction. We are obviously underperforming the global markets. The cues are very positive from the global market, but we are not able to pick up the momentum on the upside. However, we should remain with the trend. No doubt right now the momentum is lacking, but still there are important support levels for the Nifty around 26,100. We see a strong support. So that can act as a reversal level for the Nifty for the time being. And as we can see on the screen, that many stocks in the large cap segment are still making new fresh 52-week highs and all-time highs. So sectorally and selectively markets are bullish. No doubt across the board we cannot see any momentum on the bullish side, but yes, some stocks are still performing well. So there is obviously hope that Nifty will see a catch-up rally along with the global market. So we are bullish on the markets. We are asking our traders to hold on to the long position with a stop loss of 26,100 in the Nifty on the closing basis. On the upside, obviously the recent high was 26,373. That is an important resistance above which we can see Nifty to claim a fresh all-time high. Obviously 26,700 is the next resistance above that. But yes, overall trend has been bullish. 26,100 should be the trading stop loss in the Nifty. As far as Bank Nifty is concerned, as you said, it is outperforming and technically looking very strong. Yesterday's high was around 60,450 odd level, so that is the important resistance to track. But yes, overall it can outperform, because today the large cap stocks like ICICI Bank has taken the lead, and overall we see that the other stocks like Kotak Bank, Axis Bank are in an overall uptrend. So good chances of resuming the uptrend and taking out the yesterday's high. So in Bank Nifty, your strategy should be to hold on to the long position with the stop loss of 59,600 in the spot Bank Nifty spot. So 59,600 should be the trading long stop loss, and we can expect outperformance to continue in this particular sector.
So Nifty Bank's outperformance could continue, whereas for the Nifty, you've said down but not out yet. Positionally, that uptrend is likely to continue, and we are likely to play a catch-up rally very soon. But Vinay, would you say the same for the likes of Trend and Reliance? Of course, there is news flow today, and that's why they're the top Nifty loser in trade. Trend is down about 7.5%, Nifty also 4.5%. But going forward, any targets or any, what are the chart structures suggesting for these two counters? Following the Q3 update, trend is really brokers are also divided. Trend has been trading more than 7% lower. So what do you have to say as far as the week is concerned or the month is concerned? What kind of chart structure are you penciling in?
Yeah, so today's fall has been quite strong. In fact, 8% down with a significant jump in volume. So technically, obviously, we cannot go against the trend. Right now, the stock is looking weak. And if I go by the positional chart, it has been forming lower tops, lower bottoms on the weekly time frames. Though the fundamentally stock is good, our institutional team is having buy rating on this particular stock, but that is an investment view. But as far as short-term trend is concerned, it is looking weak, and we should not catch a falling knife. So unless you have a accurate strategy, you should stay away from this counter, because I'm giving importance to the primary trend. If you compare it with the Reliance industry, the primary trend of the Reliance industry has been quite good. No doubt for last two trading sessions it has been falling, but still it is placed above 100 and 200 days moving average. That means the primary trend is clearly positive. So there is a good chance that it will find support at lower level and try to bounce back. So comparatively, Reliance is looking much stronger on the positional charts right now. While trend can be an accumulation bet for the investors, but for the traders, I would suggest a wait and watch strategy.
Okay, so wait and watch strategy for trend, and a good chance that Reliance is going to find support at the lower levels. That's the word coming in from Vinay. Thank you so much for joining us this afternoon. On that note, we'll let you go. Lovely speaking with you.
Thank you.
All right, with that, viewers, it's time for a